I am good.
Okay, cool. Well, good morning, everybody. Thanks so much for having us on. Super excited to be here and talk to you guys about a couple of different changes, kind of state of the union, some stats we're seeing in the marketplace, and just be here for you all as a resource as we navigate this really, really interesting time in our market. I don't think anyone ever anticipated something like this happening. So the response that we've had from our realtor partners has been phenomenal. And we just want to let you guys know that we're still here and operating. So I'll kick it over to Shable. He's going to give an overview of what's going on now. And then Ryan Lance will jump in and kind of talk about just a brief overview of the program. So take it away.
Awesome. Thank you, Francis. And Hadi Karush, thank you for having us as always. Yeah, I think, to Francis's point, obviously there's been a kind of a seismic change in the market. I mean, obviously you guys see this first and foremost on the ground with clients both on the buy side and sell side. And so I thought what we could do this time around is provide a little bit of perspective of what we're seeing, and two, how we're reacting, responding to it. As you guys know, and this is probably a great time to kind of reinforce this, is that Ribbon was born and formed specifically and exclusively to be a realtor platform. And there has been, it's tough sometimes in the market with so many different people, misconceptions of what we do and what we don't do. Are we an iBuyer? Are we not an iBuyer? And so we thought this is like a really good opportunity for us to kind of do a little bit of a refresh in terms of what's our positioning, how do we think about our model, who do we work with, why do we do what we do, and then kind of share how the model has largely been hyper successful since we launched, but is obviously now starting to see significantly different traction positively based on the circumstance of the market. So kind of step one, we'll kind of go through what we're seeing, and then we'll go into some changes, and we'll kind of go into some of the broader points that Ryan will dive into. So as I think you may all be aware of at this point, and if not, this is probably a good time to raise it. All the iBuyers in the market have terminated operations and have literally canceled all transactions under contract. So pretty much about a week to 10 days ago, we all of a sudden started getting a flood of emails, phone calls from realtors, from home builders, from clients. And there were literally thousands of contracts that were under contract, prepped to close, and then the iBuyers literally just dropped out, didn't inform their partners, and just literally dropped out. And so we started seeing like all of this interesting behavior that kind of came out from the backside of that. We know that causes just an extreme amount of stress. Our view is that if you're in the market and you are pitching certainty, it is your moral obligation to deliver on certainty. And so we are not iBuyers. We do not buy homes directly from sellers. Our model has always been, we work exclusively through the realtor network, through our partnerships, and then work with your clients to help your clients make all cash offers that are guaranteed to close, to provide value not only to your clients on the buy side, but also to the listing side, to provide the certainty into the transaction. When the market obviously started shifting, we also, just like everyone else, we kind of rushed to take a look at what the potential impact would be on our business. And we always think it's helpful for us to share how our model works, so you also have total transparency on the decisions that we make and why we make them. So pretty much once once the coronavirus kind of spread into the United States and we started seeing shelter in place, just so you guys know, from our risk modeling, our risk went up about 8 to 10x the moment that became the case. And the reason why is that when we buy and we enable a home for a family, there's no recourse to the family, meaning we step in, we purchase on their behalf so they can transition to the new home. But if they move into the new home and decide it's not the home that they want, or they choose not to buy, there's no recourse to the buyer. And it was always designed that way to be very consumer friendly. And so obviously the risk to us is that in a situation where the market shifts dramatically, people can't get their mortgages, high levels of unemployment, that obviously pushed pressure on the portfolio. And so just want you guys to know and understand the types of things that we typically look at. If you could flip back one slide. Yeah, right here. And so, one of the things that was really, really important is that we had a choice, and we weighed the option. One option was, should we pause the operation right now, or should we continue to run the operation? And it was ended up being a very, very easy decision. And we have a saying internally, which is we work realtor hours, which means whenever the realtors have a need, our team is always open and always available. And there's probably not a time that is more important than right now for that to be the case. And so we decided to keep the operations open. We made a couple of tweaks to the model on the back end to try to help protect against risk. But we are open for business. We had the best month we've ever had in the month of March, partly just based on the seasonality, but also we had a number of realtors now who are just including us in every offer that they're making to ensure the certainty of close. And so, just want everyone to know that we are open for business. If things take a wild, dramatic change for the worse, where it just becomes irresponsible for home buyers, where they just can't secure the mortgage, then we can all collectively think about how we want to react to it. That would be a conversation that we would have with Hadi, with Karush, with the team broadly before we make those types of decisions. But right now, our belief is that this is going to be a very, very sharp decline. We're already effectively in the beginning of a recession. It's going to be a very, very sharp decline. We all see what's happening in supply. We see what's happening with showings. But we believe the recovery will be pretty fast. So we view this as a V-shaped recovery, not necessarily a U-shaped recovery. Certainly not a bathtub-shaped recovery, meaning that you won't see this like long extended drought. And just, when we've discussed this model with our board, the way we talk about it is that, and if you look at a recession, different types of recessions, there's two types of recessions that happen in this country: tops down recessions and bottoms up recessions. And this is also potentially helpful fodder as you're talking to clients. A tops down recession is an industry driven recession. 2008 was an industry driven recession. That was a structural flaw in the housing market and the mortgage market. But if you go back all the way back to 1980 and you look at every one of the small recessions that we've gone through, housing prices have actually increased through those recessions, and housing has been the number one driver that's pulled the country out of the recession. And so, as you're going through difficulties and challenges, always remind yourself that what you're doing is not only phenomenal for your clients, it's also phenomenal for the country, because it is housing at the end of the day that is the hedge against inflation, and it's what drives the country back out of a recession. So, and that's why we're so excited about being able to continue to stay open, continue running operations, and just getting closer and closer with our realtor partners. So I want to kind of put that out there. And I think our program generally obviously speaks to the idea of a guaranteed close and certainty. So we've always said that our model works really well in a hot market, but it works really, really, really well in an equilibrium and a cooling market because of the importance of certainty. And so we're kind of there right now. Next slide, please. So one of the things that I wanted to do is just share the stats that we look at internally, probably 10 times a day, in terms of what we're tracking as it relates to market behavior, demand, and potential risk. So we obviously look at supply. We look at what's happening to mortgage applications as an indicator of downstream impact of demand. We look at obviously home values and what's happening to home values. Obviously the risk to us is that if we enable, call it, let's say $100 million this month in home volume for clients, and then 3 months later, the market's off by 8%, it no longer makes sense for the client necessarily to try to purchase the home at the original purchase price. And since we provide that protection to the client, that would be an 8% loss to us, for example. So we look and care about home values. And we will adjust our home valuation models based on what we see. And then really the number one thing that we care about right now is unemployment rates. And there's a wide band of outcomes on unemployment, but it's as low as 5%, but it's as high as 30%. Our belief is that you will see and continue to see unemployment rise with hourly workers, service workers, typically the lower price point layers. And then it will start to move into more what we call the white collar employment as a second order issue, where businesses, if consumers can't spend, businesses can't fund operations. And so there are a couple orders here. How long that will last, it's unclear. But our concern is that with increasing unemployment rates, the federal government obviously put out the $2 trillion stimulus package, but it's unclear how long that package can absorb unemployment and loss of income to businesses. And so that is something that we are keeping a close eye on. And we did unfortunately see last week 3.3 million unemployment insurance claims, which was 5 times higher than the national the highest point we've ever seen in the country previously. And so, we'll see how that trends over time and ultimately its impact on home values. So we could share some of the stats that we look at. If you go to the next slide. And these are stats that you guys are obviously much more familiar with than we are. And we're looking right now at Charlotte, but this is pretty consistent across the other markets that we serve in Raleigh, Nashville, and elsewhere. But supply is off by 40% since the peak in August of last year. This is obviously significantly opposite of what we would expected with this natural seasonality of the home buying season. So that's one. Next slide. This is showing time. So this is a little bit of a signal of both supply and demand, but you can see here that on a year over year basis, showings are off by 50% and it continues to decline. We're in close contact with the team at Showing Time. So they are sending us some data behind the scenes that is even earlier indicators of what's happening. And the projection that this number is going to continue to drop over at least the next 30 to 45 days. Now, what has been pretty impressive to see is just how creative the realtor community has gotten with virtual showings, single showings, to be able to help prop up and continue to maintain the market. And so we can also just constantly be sharing out some of these key stats with you guys. But this is, obviously we've all see it. You guys see it every single day on the listing side and on the buying side. But obviously showings and the reciprocal kind of demand has been way off. All started about 3 weeks ago. So next slide. So this slide is about mortgage applications. This is a little bit misleading because this is both refinancing and first purchases. And so, we were seeing a few weeks ago mortgage applications soaring, and that was when the Feds dropped the interest rates way down to effectively zero interest rates. They've increased those interest rates for really one key reason. When they dropped the interest rates, there was a flood of refinances that hit the market, and the lenders literally couldn't support the volume. And so the way a lot of companies will manage the volume and capacity is they increase price. And so they started increasing the interest rates. Then you couple that then with what happened with the with shelter in place and the fears around coronavirus, and you've seen just like a sharp decline now in mortgage applications. Of this 29.4% number, about 16% of that is in first purchases, 33% decline in refinancing. But we are obviously seeing like a sharp decline in the top of the funnel of consumers just getting pre-approved for a mortgage. And we expect this to be the case. I don't think this is unusual based on the circumstances. We do think we're all gonna have to kind of weather the storm here over the next probably 3, potentially 6 months. But this is a stat that we obviously care deeply about because it's a signal of demand. Next slide. And then here's also another local market stat, which is the actives are in green, active listings are in green, and then the under contracts are in red. And we would have expected this to be inverted in the sense that you would expect more listings to be on the market and more under contract. That's obviously shortened up. So all the numbers, all the data are coalescing to effectively create the same story, which is fewer homes on the market, fewer showings, mortgage applications are down. As a result, just a number of homes that are going under contract is softer. And as a result, it just creates even more pressure in the market to take no risk. We've had a number of situations over the last couple of days, last week, where the listing side is actively pushing the ribbon program to buyers because the sellers just don't want to take any risk at all. They want a fast closing. They want to be able to secure their equity, move on, even if it means that they want to move into a rental property, just because they don't want to see a quote unquote falling knife. And there's just a lot of paranoia in the market. We talk to our realtor community daily, hundreds of realtors a day, and we are hearing a consistent story. And it changes on price point. The luxury market's going to get hit harder, obviously, than the sub 500K market, at least temporarily. And so we are keeping a close eye on this. And again, we will share up more and more of this data and how we're thinking about the market. But so far, this is going exactly as we expected it to 2 weeks ago when this all kind of came to a head. Next slide, please. And then this is the ultimate slide for us, home values. And you see home values kind of stabilize right now. Our assumption right now, just internally, is that we will see across the board, including low end, mid end, and high end, about a 3 to 5% drop in home values that will be temporary, and then that will come back. And the reason why is that we started off this situation with very low supply to begin with, and so there is just low supply. Because of the low supply, it should stabilize home prices, and that's a good thing, even though volume is way down. So we are less panicked right now about home values. We are more focused on transaction volume, but it is, again, something that we're keeping an eye on. But we do expect this to be about a 3 to 5% adjustment on home value over the next 6 months. Next slide, please. Okay, cool. So what does this all mean? So in terms of the changes, so we went through a series of options of how we could try to mitigate some risk. And the objective function and the things that we were really caring about when we thought about the decisioning framework was, how do we continue to stay in? Oh, sorry, I think we got some crosstalk. Okay, is that better? Okay, so yeah, so the idea here is that how do we manage the risk while also being like responsible stewards for you and your clients? So we actually split the pricing model into 2 parts. What we started to realize was that there are a number of buyers who could otherwise secure their mortgage, but they want to provide the certainty to the seller and potentially earn a small cash discount if they could. But they wanted the security. So now our pricing model is that we have a 1% and a 3% pricing model. And the way that works is that if you secure your mortgage for the closing date, it costs 1%. If you need Ribbon to step in to purchase on your behalf, it costs 3%. And so the way the mechanic in the offer to purchase is written, and this is important as you communicate this on the listing side or the buying side, is that you can put the 3% in SPCC. If the client ultimately secures the mortgage, then the 2% gets refunded back. And so the net cost is 1%. And that's how you can ensure that you effectively have embedded every offer to purchase with an insurance policy to make sure it closes and closes on time. The number one metric that we care about from a customer service perspective is on-time closings. We have 100% on-time closing. We are seeing a little bit of issue with the service providers, appraisers, inspectors being able to get access to homes. The attorneys are still largely in operation. It's taking a little bit longer. The courthouses, some of them are shut down, but so far in just last week, we have had only 1 transaction that was delayed because of an attorney availability, but that was delayed by 24 hours. Otherwise, we've had 100% on-time closing. And just as a reminder, every one of you has a dedicated account manager and a dedicated transaction coordinator on our team to navigate you to a smooth closing and a seamless closing. So 3%, 1% is the model. It certainly doesn't cover our full risk, but it certainly does help manage to the outcomes that we want, which is families being able to get their mortgage and some additional protection in the event that we have to step in to fund. And then we also capped the buy box. As you know, we were enabling homes all the way up to $1.5 million. We've capped that to $500,000 temporarily. Just, that's about 90% of all the transaction volume that we do. It's just pretty much after you go over the $500,000 marker, you have two issues. One is the jumbo loan market right now is shutting down pretty much. We have a deep relation with Quicken Loans, Atlantic Bay, Fairway, Movement. I mean, you name it. Obviously, Executive, and everyone is telling us the same thing, which is the jumbo market is just getting really, really slow. That's one, and obviously in the luxury market, that tends to soften the first in a down market. And so we have capped the buy box to $500,000. If it's plus or minus a little bit of, 510, 515, like we will look at those obviously. But right now we're not really evaluating anything that's in the $800, $900 million price range. It's a very small percentage of our book of business, but just want to make sure that everyone's aware of that. Let's see, next slide. Okay, so cool. So with all that, I know that was a mouthful. One of the things that, as this is our view is that in these types of markets, in these types of situations, you don't play defense, you play offense. And the way you play offense is you innovate and you create ingenuity across everything that you can do. When we enter the market, the number one partner for us has always been Exec. Hadi and Karush were with us on day one. They pretty much helped put us in business. And so one of the things that we're super excited about is we now have a brand new partnership with Executive Home Lending, EHL. And what this means now is that it's very deeply integrated. So as you have clients that you're looking to get pre-approved for a mortgage, if you take those clients through EHL, once EHL provides a pre-approval, we will automatically and instantly upgrade them into the cash offer. And so it simplifies the process for you. It provides a lot more transparency for the client. And it's a very, very different and unique financial offering compared to other lenders in the market. And so it's all about speed, transparency, and certainty. And so we've been working diligently with the team over the last month or so to kind of implement this, but we're really, really excited about rolling this out. And this is now officially live. And so we think of this as like a very integrated experience between the realtor community, the lender community within Executive, partnering very closely with our account managers and our transaction coordinators and our underwriting team. But we literally just removed one of the two critical steps that we need to do approval. And so now if you run a pre-approval that comes in from EHL, the process to a final approval will literally take less than 15 to 20 minutes total, because the only thing we need to do then is underwrite the home. And we prioritize with these partnerships are EHL and Exec when it comes to home valuations. And so you'll get really, really fast home valuations, and you'll have fully approved cash buyers if you have the volume of pre-approvals coming in through EHL. So we're really, really excited about this. I want to pause there for a moment and open it up for some questions, both in terms of the market, our adjustments, and obviously the partnership with EHL to get, really want to make sure we can just have a very free, open, and kind of raw conversation. Any questions? All right, cool. Before I pass it on to Ryan, I think our recommendation right now is, and this is what others have been doing, is in these moments of need of certainty, work with, everyone has a dedicated account manager. Please work closely with your account manager early in the process. We can get everything approved early in the process, and you can start to insert the effectively the insurance layer directly into your contracts and all your contracts, just to protect against unforeseen issues that may happen in the closing window. The market's moving so rapid right now. Every day things are changing. And so our recommendation is to do so, really try to, especially on first-time home buyers, where they may have FHA, VA, low-level conventionals, where they could otherwise probably secure the mortgage. It's a great opportunity for them for a 1% fee, always negotiable between the buy side and the sell side, to just ensure for all four counterparties, listing agent, buying agent, buyer, seller, to know that with 100% certainty on April 17th, that home is going to close at 11 a.m. like everyone said it's going to close at the price that everyone negotiated up front on. And so it's all about knowing everything up front. And so our recommendation is to really spend time with your account managers and everyone get you guys set up. We obviously prioritize the exec team when it comes to these conversations. Cool. Let me pass it over to Ryan.
Awesome. Thanks so much, Shavel. Really appreciate you taking time to jump on. Definitely been looking through the chat line and the participants list. It's exciting to see a lot of familiar names. And just a quick intro, once again, my name's Ryan Lance, so I help lead our business development team here. I'm super excited to kind of get a little bit more in depth today on, all right, we're rolling out this offers program with EHL. I think to Shavel's point, there's such an opportunity for us to really attack during these times and also bring a solution to your sphere and your current clients that can provide more certainty and transparency into the real estate transaction. So our agenda today, what I really want to walk us through is kind of narrowing and doubling down on why Ribbon, right? And how can we leverage the EHL partnership? We're then going to talk through how it works, right? So I want to make sure you feel super confident and understanding really the principles and the pillars to the program. And then we'll go kind of recap on Shavel's point about the pricing and qualifications. And then we're going to have everybody pull out their phones and actually walk through getting started. So if you're sitting there today and you've got a couple listings or sellers you're working with currently and or buyers, I'm going to walk you through exactly how we take the next steps in order to make that next offer. Cool. So to reiterate here, our mission really has never changed. At the end of the day, everything we do is to make homeownership more achievable. And I know in the past, many times, you know, if you're asked really what is Ribbon on the streets, it might have been difficult to say exactly what we did. But leaving today, really the end goal is want to make sure you feel confident in saying, you know what, Ribbon is simply a powerful tool in our pocket to help convert your offer to cash and non-contingent on your next home for purchase. Right? So to Shavel's point, we can take your EHL approval letter and simply convert it to cash in order to go help win the dream home. At the same rate, we wanted to really pull out really 4 key ingredients into why our program exists and where, you know, RE/MAX executive agents are truly finding success and helping increase conversion rates for you guys. But at the end of the day, also growing your business, right? That's what this tool is totally designed to do, while making it more simple and transparent than ever before. And so really right now, certainty has never been bigger than ever. And so 98% of all of our Ribbon deals are actually closing. Okay, so if you put kind of your buyer's agent hat on, we've talked through a little bit today about the certainty on the buy side, but also if you put your listing agent hat on, you know, I'm sure the sellers right now are constantly asking you, you know, hey, if we receive an offer, how can we guard it with everything we've got? So I want to open up our minds today a little bit to how could we potentially convert a buyer's offer on one of your listings to a cash non-contingent guaranteed to close once we're through the due diligence period on a contract to give your sellers more certainty. And then we'll definitely walk through it on the buyer side, how to get started there. Really though, giving you guys back flexibility at the same rate, right? So how can we help you guys close at a higher pace, right? With conversions and different leads that are coming in currently. Secondly, you know, in the past, you've heard us speak a lot towards like quick closings, rapid closings, you know, cash and quick, obviously super powerful. I think as times have changed, we're getting even more opportunity and leverage to negotiate, potentially a little bit longer of a settlement date, right? So you'll see here that, remember, as a recap, the quickest we can close on our homes to purchase is 14 days. But now we're gonna have more opportunity and flexibility than ever to be able to negotiate a little bit longer of a close in order to secure financing and secure, in order to buy that property without Ribbon actually having to step in and reserve it. And then ease and access, 2 key ingredients. How many of you have probably signed up for some type of technology platform or invested in one, and the dedication is just really not there to help implement it? Right? You know, one thing we don't take for granted is making sure we keep the relationships as strong as possible. So very similar to how you have your, you know, vendors in your back pocket saved in your phone. You want to make sure leaving today, you've got your Ribbon rep, we like to say, in your back pocket and save for any deal situations that you guys need to talk through. Whether it's after hours or weekends, our team's here for you to lean on our infrastructure and our support. But as a quick recap on how it works, right? We've really boiled it down to a 3-step process. Okay, so if you've got a buyer you're sitting on today that comes to you, it's still business as usual. Let's get them over to EHL. Okay, let's make sure their income, their assets, their credit are fully verified. Okay, once we get that approval letter, to Shavel's point, we're then ready to go ahead and give you guys access to cash up to that $500K amount. So you do want to make sure you're working with EHL to get the sales price on there so we know what their maximum buying power is going to be. From here, we can then make our offer on the home for purchase. And so it's still business as usual. Now we could potentially negotiate an even longer settlement date on this home for purchase so that when we make our cash and non-contingent offer, right? And to recap, when we say non-contingent, there's 3 contingencies we're helping remove either for your buyer or for your seller if you're receiving a ribbon offer or converting one to ribbon. And that is either a home sale contingency, financial contingency, or appraisal contingency, right? 3 kind of gotcha moments that can happen in the real estate transaction that could derail potentially a closing. So that's where we're taking that risk and we're really removing it from the seller's plate, but also supercharging your buyer's offer on the home for purchase. Okay, so if you are unable to close, so you make your ribbon offer, okay, the offer, let's say, gets accepted, we're pending, we're under contract, we're working towards closing, right? In the event either A, the existing home has not sold in time, okay, or B, let's say the lender is unable to secure financing by closing date on the home for purchase, that's when Ribbon would actually step in and we would reserve the new home for purchase. Okay, I'm gonna pause here for a second because in the past, I know a lot of you have probably used us to go quick and rapid, but I think now as we transition, there's even more opportunity for your clients to reap the 2% rebate that Shavel mentioned earlier in order to secure your own financing, right? So the end goal in really adding Ribbon here is to give your buyers a guarantee to keep that dream house, but also to give a seller even more certainty in receiving an offer that's going to close so that they know on closing day, hey, I can schedule my moving truck. I know that I'm closing and I can get on with my next property. And so in the event that though we do need to step in and Ribbon needs to reserve the new home for purchase, we can do so. Remember, we would then fund that transaction. The deed would go in Ribbon's name. And that's when physically your move-up buyer, your first-time buyer, maybe even your relocation client at this time could physically move into the new house and take occupancy. That's when they're going to begin their reserve days. Okay, so at maximum 180. And that's when you're working to either A, sell their existing house, or B, you're working simultaneously with EHL in order to secure their financing so that they can then buy back the reserved home from Ribbon for the exact same price. Okay, I see a couple questions in the chat line. Great question, Kat, explaining this 2% rebate. So we're going to get there right now. So that's really kind of how it works, right, from an A to Z. But to really simplify the product into two options for you, we've done so on my screen above. So you can see that there's the offer upgrade solution, okay, and then you've got the flexible move-in solution. So if you're thinking about this, really anyone who can obtain a mortgage or an approval letter today, right, under 500K can take advantage of the Ribbon program. Okay, you can now leverage your closing date to potentially maybe 28 to 35 days out in order to give you time to sell the existing house and or secure financing and working to obtain the mortgage, right? At the same rate, you're still going to negotiate the 3% Ribbon fee, okay? So to Shavel's point, 3% is the Ribbon fee. Now, if the client is able to secure financing by the first closing date, or B, you are able to sell their existing house by the first closing date, thus allowing your clients to secure their financing, that means Ribbon doesn't actually need to step in and fund and buy that house. We were simply there as the security net and the safety blanket to give your buyers guarantee and to give sellers certainty, right? That's when, if we don't have to step in and fund, your clients will be able to reap the 2% rebate benefit of us actually not having to fund. So that net cost of business was 1%. And the best way to explain this kind of externally to your client is this is the offer upgrade option, right? Where you're attaching ribbon to give the certainty and the simplicity. And at the end of the day, if they can secure their own financing, it's a 1% cost, okay? In the event your client secures financing, 1 to 3 days after closing, that's when our team would actually rebate 2% of the ribbon fee back to your client, since we didn't have to step in and fund the home. You know, Martin asked a great question on the chat line. What if the buyer loses their job during the process? Happy to offline that with you, Martin. You know, it really depends on kind of where we're at in the process and the transaction timeline. This is definitely why we're working super close with EHL to talk through every buyer situation. So not only are we protecting the risk on ribbon side, but we're really putting your buyers in a good spot, right? Because at the end of the day, we want your clients to feel confident in their home purchase. So be more than happy to offline with you there. Okay, so hopefully we're clear, and write me in the chat line if you have any questions on the offer upgrade and securing their financing to obtain the 2% rebate. Now, in the event, okay, the existing house does not sell in time, or lender calls and just like, hey, we're unable to secure financing by closing date on this first home, that's when, remember, business as usual, Ribbon will step in, reserve the house. That's when it is truly our 3% ribbon fee. So we'll collect that on closing day, most likely from the sellers in seller paid closing costs, right? Because that's typically how we're negotiating the ribbon fee, is by asking for it in seller paid closing costs when making our strong offer. Okay, so we would reserve it, your clients could physically move in, and this is when they're gonna pay their daily reserve fee specific to each house. And I'm gonna go through exactly how do you know what the daily reserve fee is, and how do we figure out negotiating the 3% into the contract once we get to our next steps in getting started. So Jackie asked a great question. When does the 180 days start at contract date for the new home, or 180 days from the closing date on the new home? Really good question, Jackie. So to help clear that up, remember, there's no harm, no foul. Really what Ribbon is enabling you to do today is get that contract in hand on the home to buy, okay? Business as usual, you're still working and hitting the ground hard to sell their existing house to perfectly time the double closing. We want you to work towards that. While we're pending and under contract, remember, this is not when the day 180 begins. In fact, only day 1 starts once Ribbon actually needs to step in, fund, and reserve the new home for purchase. So simply today, we can go ahead and take your buyer's offers, get you that contract in hand. You're still working to secure your financing, obtain that mortgage, buy that house, guarantee your full commission. And in the event you need us to reserve, that's when the flexible move-in solution comes into play. And we'd be more than happy to reserve that in order to win that dream house and give you just a little bit more time and flexibility. Great question, Jackie. Any other questions on this kind of 2 product offerings that we can leave with today, positioning to our clients? Okay, cool. So let's keep moving. Just wanted to touch on, we've talked a lot today about, as the agent, what's the feature, what's the benefit? Just want to spend a little bit more time on the buyer side, right? So remember, some of the challenges that we're helping remove for you and your clients is the uncertainty, in perfectly timing the 2 closings, right? If you think about it right now, 60% of our existing buyers actively looking in the marketplace have an existing home to sell. 80% have to actually sell in order to buy, right? So they just simply can't qualify for both loans. And this is where we can walk in your next listing presentation and say, hey, Mr. and Mrs. Consumer, we have an additional solution on our belt to work to getting to your next house. And don't worry, because if we cannot perfectly time the double close, then Ribbon can help reserve the house, right? And then I spent some time on time and flexibility, but really just transparency, right? So if you're asked today, how can Ribbon help? Remember, it's a 3% Ribbon fee. Now, if you could secure your own financing, then that's when they're gonna receive the 2% rebate. Thus, it was 1% net cost of business. Okay, so getting started, right? You might have been able to attend one of our trainings in the past, and this may be a little bit foggy on how do I actually get this offer out. I've got my EHL letter today that I'm sitting on, and I want to be able to add it somewhere. How do I do that? How do I get started? So to make a offer today, there's really 2 key pieces we need. It's really almost like a 1 + 1 = 2. Okay, so the first thing is buying power, right? We do that through the EHL pre-approval letter. You want to make sure you upload that to your buyer's account inside of your agent dashboard. And in the chat line right now, I'm actually going to drop a sign-in link. If you cannot recall where your Ribbon agent account is, or you actually need to create a new agent account, if you look to the chat line, I've dropped this link, and I'm going to ask that you walk through it with me. So go ahead and start that process of signing in or signing up. Once we have buying power, the second thing we need to do is making sure that we're being responsible with the cash that we're giving the buyers access to, right? And so that is done through adding the property address you guys want to make your offer on. That's where our valuations team and our infrastructure is here to support. We'll take a look at that property and let you know what the maximum Ribbon offer we can make specific to that home would be, okay? It'll also let you know exactly the daily reserve fee so that your buyers know in full transparency what that cost of business was, and then we can make the best decision possible that makes sense specific to your client's situation. And you can do that today. I'd say I get asked a lot, what's our typical turn time? You know, we need that back super quick. I'd say we're averaging around really like 2 to 4 hours in getting that back. And so, you know, that's where it's making sure you get that uploaded and added earlier than often, but it's coming back relatively very quickly. John or Sarah, hey Ryan, per Karush, can you confirm the difference again between the EHL plus Ribbon program process versus the standard Ribbon process? When you're saying your lender, are you referring to their EHL lender? Sorry. Yeah, absolutely. So to Shabel's point that he mentioned earlier, right? When you upload your EHL approval letter, that's prioritized with our buyer underwriting team. And so that's where we can then thus step in and grant immediate buying power, right? So we're working off the clock, around the clock with EHL to make sure that we can grant buying power in times quicker than ever before. And to Shabel's point, you know, we can give 180 days of the flexible closing and work with your clients. So yeah, great point, Sarah. You know, it really makes for a smooth transaction when the loan officer understands the Ribbon program. And there's really a lot of power in that to make sure we set good client expectation and customer satisfaction, right? Because I think everybody on the call today can probably agree, you know, one of the best ways to grow business is through organic referrals, right? And so that's why we have partnered with EHL to really help control that customer experience to make sure as the agent you can generate more referrals based on the process. And EHL and our buyer underwriting team have had many conversations on making sure we're all on the same page, especially during this time with so many kind of moving parts and pieces to buyers. So we definitely will prioritize that on our end. If you are unable to actually click that link, I wanted to provide an additional opportunity because I'm going to walk you through the dashboard on how to add your buyer, upload your EHL approval letter, and then add that property. So if you'll text the code 5FA7 to the 704 number, that will also allow you access into your agent account. Okay, so you can either log back in or you can sign brand new and up by texting that code to the 704 number and get started today. Cool, so if you actually go ahead and pull that up right now, if you've texted it, you grab the link inside the chat room. This is where you can drop in your name, your email address, your phone number, let us know your MLS, and we can then go ahead and get you signed in and signed up onto the account. From here, you're going to actually see your agent dashboard, right? So we've got a rockstar engineering team in New York City that's fully focused on building a really unique, you know, solution in your pocket to be able to start your offers, right? So when you log in today, you can get started and see two things. Your dedicated account manager. So we've been mentioning, you know, make sure you build a relationship, save this Ribbon Rep's phone number in order to have a great, you know, conversation whenever you need it. You can also access marketing material inside of your account leaving today to make sure that you have those, you know, materials to send to your clients. And when you actually click start an offer, this is then when you can add a buyer, right? And so to recap the different buyer situations that we're working with you all on, you know, first time buyers, move up buyers, relocation, new construction, or falling out of contract. These are our kind of 4 to 5 different buyer situations that we can help starting today. And if you're walking through it with me right now, you can even hold off on putting an email and a phone number in order to at least get the process started, right? We feel this is what we need to take in order to say, hey, you know, Mr. and Mrs. Consumer, here's a solution that we could potentially take with our next offer. Right, so a quick poll to the audience. What were the 2 things we actually need to make the offer, okay? Answer here is B, right? We need the valuation back, and we need the EHL letter uploaded to your account, okay? From here moving forward, we can actually then grant buying power, and as the agent, you can make your offer, and we'll let you know step by step on how to fill out your OTP. So here's where you'll take the approval letter and upload it. You can browse files, let us know the actual loan officer at EHL that's helping work on the file so that our team can quickly coordinate in order to review and grant buying power. As soon as we do that, we can then add the different properties you all are interested in offering, right? So you can add multiple properties, right? This is where we want to bring you as much value as possible. And this is where you'll get the maximum ribbon value, and you'll get the actual daily reserve fee specific to that property. Right, and a quick recap. So remember, if you're asked what can Ribbon buy versus what can we not buy, right? So remember, the buy box is 150 to 500K, right? Things we can buy, single family, townhome, condos. We do want to make sure we're checking the leasing restrictions in those specific communities. And remember, at the end of the day, you know, the end goal in this is so that you can leave making sure your offers are accepted, making sure your offers are guaranteed to close, and that we're providing buyers and seller the certainty and enabling the transaction. Cool. Any questions before we jump off here? I want to open it up a little bit. I know that was a lot. Any questions on the chat line, or anyone want to speak up? So Jackie asked a great question. Within the 180 days, does Ribbon require certain price adjustments to the listing? So talking more about the existing home for sale, what happens if it doesn't sell in the 180 days? Jackie, great question. You know, when we looked at this process, and specifically, as you mentioned, the existing house for sale, you know, we truly believe in you guys as the agent to be the market expert. Remember, we're more than happy to talk through kind of our sell side solution to be able to give your seller more confidence in selling their existing house, but we don't require price adjustments as of right now on the existing house. I think that's something where, as a team, we'll be looking at their existing house to see, you know, how can we help them sell for maximum value. And so what happens if it doesn't sell in 180 days? That's a great question. There is 2 ways out of the program, right? The first is, you know, a buyer can fulfill the full 180 days, and if they cannot secure financing, then yes, they will need to vacate the property. You know, to Shavel's point earlier, this is why we're looking and working super closely with EHL to make sure we're putting buyers in a good position, right, at the end of the day. And look, sometimes we might have to say no more than we say yes, but it's really to make sure we're protecting your buyers. Now, they can fulfill the full 180 days. If they do not buy back, then they would need to vacate the property. They would lose their earnest money and their due diligence specific to that home, okay? Second option is if they're 27 days in the house and they call Ribbon and they're like, we hate this home, we want to move out of this property, it's just, you know, or we got relocated to California, then we're going to ask for 30 days notice, okay, 2 months rent, then they lose their earnest money and their due diligence specific to that home. So those are the 2 solutions out in the event that someone is unable to buy back in that time frame. Really great question.
Brian, this is Kurosh. I have a clarifying question here. Can you hear me?
Yeah, I got you, Kurosh.
Okay. So this program, you know, I just want to make sure that I understand everything correctly. This is a program that you're only offering to your approved lenders. So it's not available, as far as the rebate is not available to every mortgage company out there. Am I correct?
So the 2% rebate, the 2% rebate is a part of our program as it exists today. I can tell you that, as of right now, as Shavel's messaging, we are very guarded on what we're taking on versus not taking on. And by us partnering with EHL, definitely a value add in making sure that if we're going to get buying power, it's going to be, in hopes with our preferred lenders and partners there. Shavel, do you want to jump in on that as well? Francis?
Yeah, sure. So, to Ryan's point, Karush, so right now, obviously, because of the current market conditions, we're obviously scrutinizing pre-approvals that are coming in, and because we accept from the realtors pre-approvals from lenders, the key benefit right now is that we do not scrutinize those from EHL. Meaning, if EHL says this is an underwrite, we're good with this, we automatically instantly do this. That's not the case with other lenders. And so the 3% and 1% product with a 2% rebate, that's the core program, as we just recently kind of updated it in the last week or so. But like one of the key benefits is that if you have an EHL pre-approval, it automatically is approved, which is not the case for other lenders.
Okay. Thank you.
Mm-hmm.
Absolutely. Thank you, Jackie, for your time today. Appreciate the questions. Anything else, guys, on the line that we can help chat with? I'm going to make sure we send a really strong follow-up email, and I know Sarah's going to work on that as well in order to help talk through next steps. But highly suggest really focusing on getting your Ribbon rep, even pull in EHL and our rep from Ribbon to actually get on a three-way call in order to talk through how can we start to position this with our next clients. I think there's a lot of value in taking lender, agent, and buyer and putting us all in the same room to make sure we can talk through how do we position our next offer and continue to maintain business throughout these times.
Awesome. Thank you so much, Ryan and Francis and Shavel.
Thank you, guys. As always, we appreciate it. Good luck. Stay safe. Be healthy. And we'll be all in very close touch here.
Thank you, Shavel. Stay well.
Thank you, guys.
Get your
Thank
time.
you.
Thank you.
Thanks, guys.